Dr. Chandrika here to talk about non-banking financial institutions. First, let us know financial institutions which collect funds from the public and places them in financial assets such as deposits, loans and bonds rather than tangible property. Here we have two types. One is banking institutions, another one is non-banking institutions. These two comes under the category of financial institutions. First, here non-banking financial institutions is a financial institution that doesn't have any full banking licenses or is not supervised by a nationalized or internationalized banking regulatory agency. And these are the institutions that provide banking service but do not hold banking license. That is important point in these non-banking financial institutions. Doesn't allow take deposits from the public. Here we have three categories or three types. Those are UTI, Unit Trust of India, Life Insurance Corporation LIC, General Insurance Corporation GIC. Three categories under this NBFI, non-banking financial institutions. Now let us see how it is differ with the banking system. Non-banking financial institutions cannot accept demand deposits, various types of business regarding financial activities, and it cannot provide checking facilities also. It is comparatively much easier to get a registration as an NBFI. Much lesser control over NBFI. It is opposite in banking sector. We will discuss all another concept banking sector. Now the importance of non-banking institutions are like greater reach. These are very flexible in tapping resources, retail services to small and medium business, as well as it is very important component of financial market. These are all our best examples in financial non-banking financial institutions. Now let us see the functions: broker of loanable funds, mobilization of savings, cancellation of funds into investment, stabilize the capital market, provide liquidity. Each and every function, it is trying to reach all the people by providing various services to the public, by providing loanable funds and mobilizing all equity and all. Now coming to the role here, it is developing sectors like transport and infrastructure. It can provide employment generation, wealth creation, and it is helps for economic development. And one important point is that the role of non-banking financial institutions, it can finance economically weaker sections. That is major important point. Guidelines on fair practices. One is application for loans and their processing, loan appraisal and terms and conditions, disbursement of loan, customer acceptance policy, customer identification procedure, monitoring of transactions, risk management, and another guidelines regarding KYC for existing accounts, and finally appointment of principal officer. These all are the guidelines given by these non-banking financial institutions. Under these 8 categories we have loan company, hire purchase company, investment company, mutual benefit company, housing finance company, equipment leasing company. All through these different categories, it is providing all the services related to these non-banking financial institutions in one by one in each sector. Here we have top 5 NBFCs in India. One is Housing Development of Finance Corporation Limited, Power Finance Corporation Limited, Rural Electrification Corporation Limited, National Bank of Agriculture and Rural Development, Infrastructure Development Finance Company Limited. Top 5 NBFCs. Later types of non-banking financial institutions: risk pooling institutions, contractual saving market makers, specialized, and finally financial service providers. In these through 5 categories providing of all the financial services to the people. Let us see one by one. First one is risk pooling institution. It can underwrite economic risk associated with illness, death, damage and other risks of loss. There are two main types of insurance companies: general insurance, life insurance. In another one, contractual saving institutions, it can provide the opportunity to invest in collective investment vehicles, that is CIV, like mutual funds and pension funds and all. Another one is market makers. It is like a broker dealer institutions that quote a buy and sell price and facilitate transactions for financial assets. Such assets include equities, government and corporate debt, derivatives, foreign currencies, etc. Another last one is financial service provider. It is like a brokers, management consultants, financial advisors, like a fee based service basis they can provide, improving the informational efficiency for the investments, and the case of brokers offering a transaction service by which an investor can liquidate existing assets. Let us now the conclusion for these non-banking financial institutions. It can strengthen the professionalism of NBFC sector through education and training, making them more organized, and it needs to educate people about NBFC. A credit delivery mechanism needs to be more transparent and hassle free. There should be more strengthened norms for the defaulters. These are the points it has to be focused for more development of non-banking financial institutions.